Hey, real estate den members. It's one of your den mothers, Gena. I am so happy to be here with you today. And as you know, the subject at hand is funding. Money, 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 money. How do you find money to get those deals done? And I want to spend a good amount of time on, let me see, how many techniques do I have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 different ways to get money or not need money. So I'm hoping that by the time we get through about roughly an hour here, that you have picked up a new, hi Karen, that you've picked up a new trick or two, or maybe gotten a more thorough understanding of a technique. I really want to encourage your questions. On my computer, I can see a little chat roll, and somewhere on yours, you can see a chat roll as well. So please feel free to post comments or questions as we go along. I am here to help you, okay? I'm not particularly interested in a monologue situation here. I know what I know, and I'm just saying it to myself if you don't participate. Of course, if you're not with us here live and you're watching a recording on the Den a little bit later, hey, Stephanie, that's awesome too, and you can still ask questions because you can post questions in the private Real Estate Den group on Facebook, or even better, you can message anybody, including myself and Carol and Jay and Andrea and Mirza. You can message us within the Real Estate Den itself. And right on the front page, the home page of the Den, there's also a link that Carol has put up about reaching out to any of the experts, okay? So please don't be shy. We can only help you if you let us know what you need, right? So let's begin. Is it after 4? It is a minute or two after 4, so I think it's fair game to begin. I'm going to just, for a second here, I'm going to keep talking, but I want to see what's going on within the Den group, see if anybody is lost. Doesn't look like it. Looks like we're in good shape. Okay, so here we go. So money, one of the biggest limiting beliefs I think we all have at some point in our career is it takes money to make money, right? Takes money to make money. How many times have you heard that? Hi, Sharon. And when I first started learning about real estate, which was back in 2009, and I heard about these, I didn't even know ordinary people invested in real estate, because that was going to take tons and tons of money in my mind, right? So I had a lot to learn. And so, first of all, let's talk about a situation where either you really have no money, okay? You have no money, your credit is in the basement, nobody you know personally is going to loan you money. You have no experience, so you're not going to be able to get a hard money loan. You don't qualify for any kind of traditional loan. You just have no money and nobody you know that you can get money from. Well, honestly, there are two solid techniques. Those of you that are watching, which are all ladies, by the way, at the moment, I shouldn't say everybody watching is a lady, but the ones posting are. Tell me, go ahead and post. What are two techniques that you can do in real estate investing which require no money? Dun, 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 dun. Boy, if anybody's tuning in right now, they think I'm crazy, right? Hey, Lester, hi. So, all right. I don't know how big of a lag we have between me talking and me seeing what's in the chat room. So I'll answer the questions for you. Obviously, wholesaling and a sandwich lease option. Now, this is not a lesson in wholesaling, nor is it a lesson. Thank you, Stephanie. Ding, ding, ding. You're right. Wholesaling. So wholesaling is such an absolutely fantastic technique. And it's not just for beginners. When I first started, I was fortunate enough to spend some time with Matt Larson mentoring me, if you know who he is, okay? And at the time, I was all gaga about fix and flip, right? It's so exciting. Oh my goodness, right? And Matt said to me, I would rather do 4 or 5 wholesale deals than 1 fix and flip. I thought he was crazy, right? But honestly, the longer I am in the business, the more I like wholesaling, because there is no risk. I mean, I put that in quotes here because I guess any part of life has risk, right? You step out on the sidewalk, you could fall. But, it's such a risk-free technique, and it doesn't require money. Now, somebody's going to say, what about earnest money, Gena? Well, let me address that in at least 3 different ways. Number one, if you absolutely don't have earnest money, well, let me say number one, point A, you could find it. Okay, going back to Matt Larson again, I was fortunate when I started. I had some assets. I didn't have to worry about having earnest money myself, but Matt had to borrow it from a friend, and pay him back with a lot of interest, okay, once he got a deal done. So you could find earnest money. If you're putting offers on properties which are on the MLS, which is what Carol kills it with wholesaling, right? Earnest money is due when a property the offer is accepted in most cases, okay? There are some exceptions to that, a VA property, a HUD property, okay? But in general, you don't need the earnest money until the deal has been accepted, all right? So make it your priority as a wholesaler to build an incredibly strong buyer's list. Now, Carol gave you 3 live sessions on wholesaling, so I'm not going to repeat how to do all those things. But if you build a serious buyer's list and you get a property under contract, it is not impossible, it won't happen every time, but it is not impossible to sell that deal, okay, to do an assignment of contract to your cash buyer before your earnest money is due, because most MLS contracts, they're different in every MLS system, but most of them, earnest money is not due the day of acceptance. In many cases, it's due 48 hours later, 72 hours later. And by the way, you can always change the contract to make it that way. The buyer then, or the seller then, has to decide whether they're okay with that. So if you're wholesaling and you're worried about earnest money, make sure you have a strong buyer's list. Once you have a relationship with your buyers, a lot of them will even advance you earnest money, if you will, okay? And then you can put it into an escrow account, so you're not out spending it, and you can refer to that escrow account with all of your offers. Secondly, if you are just really not digging any of those ideas, just looking over to see if we've got any questions yet. Nope. If you don't like any of that, then work on off-market deals, okay? There's so many ways to get deals off market. Word of mouth, co-wholesaling with other wholesalers. Yes, I still do bandit signs. A lot of controversy about that. Direct mail, door knocking, calling landlords, seeing if they want to sell, posting brochures on bulletin boards. All of those things do work. Are they work? Yeah, they're work. Surprise, this business is work, okay? But when you're making an offer and you get an acceptance on an off-market property, I use a promissory note instead of actual money. So you don't even need earnest money in terms of actual cash or check or anything like that if it's off market. Okay, so I beat that up a lot. Wholesaling. Second technique, if you have absolutely no money, or maybe you have money and you just don't want to use it, right? Sandwich lease option. Okay, I'm not going to discuss that in detail. This is about funding, not techniques. But in a sandwich lease option, you find a homeowner who is willing to sell their house on terms. You find tenant buyers who probably don't qualify because of their credit to get a mortgage right now, but they have income, they have employment. You match them up, you got 2 leases, you got 2 options, you got 2 purchase contracts, and you make money on the option, you make money every month, and you make money on the purchase in the end if they exercise their option, and you didn't have to have any of your own money to do it. Beautiful technique, right? Okay, so that's what if you have no money or you don't want to use any money. Just wholesale or just sandwich lease options until you build up that money. Now, what if you do have cash? Okay, let me say this. We get so hung up on OPM, other people's money, and it's a beautiful thing. On the other hand, there is nothing wrong with using your own money. There's nothing wrong with that, okay? So let's talk about a couple of ways where you are using your own money or your own assets to get deals done. One of my favorite techniques is using a home equity line of credit. If you are a homeowner and you have equity in your home, and what do I mean by equity in your home? Your mortgage is lower, substantially lower than today's value of your house, okay? So banks, the credit unions will give you a home equity line of credit. We talk about it as a HELOC, so that they give you a maximum amount that you can borrow. It's kind of like a credit line, okay? It is a credit line. It's a line of credit on your home, the equity in your home. So they'll say, you know, and you can, generally they'll take your mortgage plus however much line of credit you want or can qualify for. They'll go 75, 80, 85, 90% of the value of your home. And the more percentage of value that you take out, the higher the interest rate will be. But let's say you get a home equity line of credit for, like, say 4%. That's pretty typical. And you use that to do a flip or to get a rental where you're making 10% or more. Well, you have what we call arbitrage, right? That's the difference in the interest you're paying versus the interest or the profit that you're earning. So if you have a rental of 10% and you're paying 4% on your home equity line of credit, you're making 6%, right? I know that, you know, when I first started, my husband and I had that mindset that said, we've got to pay off our house, we got to pay off our house, got to pay off our house. I've gotten over that, because if my house is paid for, you know, that money isn't doing anything for me. You want your money to work for you. So from my perspective, having a mortgage to pay or having even a HELOC on top of a mortgage to pay, if my money is earning money, then that is financially smart, okay? So I've done flips with HELOCs over and over again. I've also used HELOCs for the repair costs, the renovation costs on a flip, right? So, you know, it's a low interest way to go. By the way, when you get a HELOC, you don't have to use it, and you're not paying any interest on it until you put it into use, right? So there's really no harm in you getting one and having it on the ready for that deal that you may find in the future. There is one caveat to that. Some people, and I used to be one of them, are really proud of their credit score. You know, it's like a badge of courage. I've got a 785 credit score. Well, that's cool. And it's important if you're trying to get traditional mortgages or new credit cards or whatever. Yes, you're going to need a decent credit score. However, it's not as important to me as it used to be, because once again, if I have extended myself in various loans or credit cards or whatever, and that money is all working for me and it pulls my credit score down, I don't care. It's a matter of what's more important at the time. And frankly, it's not that hard to get your credit score back up. Now, I've said all of that because if you do open up a HELOC, even if you're not using it, it may cause your credit score to go down. Okay, so I just throw that out there. Let's go directly from a HELOC. And let me check. I'm going to put on my reading glasses, see if we have any questions yet. Do you need to have a job to get a home equity line of credit if your house is paid for? Karen, maybe. But let me say no, because I have gotten a HELOC when neither my husband nor I had any kind of normal job, you know, no W-2 employment. We did have income from rentals. So they're going to want you to have enough, some kind of money coming in so that you could pay the minimum payment on any of the money you're using. But you don't necessarily have to have a regular job. I would suggest in a situation like that, you know, you're probably not going to do as well with the big banks like, you know, US Bank, Bank of America, Wells Fargo. You want to go with more of some of the smaller banks, even if they do follow the Fannie Mae and Freddie Mac rules, or most certainly your community banks and credit unions, which we'll talk about here in a little bit. So they are going to be a little bit more creative. Hey, Donna, welcome. I'm sorry you couldn't get in right away, but what I've talked about so far is if you have no money or you don't want to use any money, wholesale or do sandwich lease options. And then I've gone to talking about home equity line of credits and how if you have equity in your home, you can get a home equity line of credit at a percentage way less than what you could be earning in a real estate deal of a rental or a fix and flip. And I know, of course, Carol will post this on the Real Estate Den website. I hope you're taking advantage of watching those previous lives so you can catch up on anything, or, you know, you don't have to be furiously taking notes. You can always go back and re-listen. All right, so very similar to a home equity line of credit is a line of credit, okay? Now, you as an individual can qualify for personal lines of credit. You will have to have some assets. You will probably have to have decent credit. You may or may not need employment. So, some of these will apply to all of you and some won't. You can also, if you have some credit history for your business, your LLC or S Corp or whatever you might have, you can also get business lines of credit. Now, this is dependent on more things than a HELOC would be. Okay, the HELOC, primarily the deciding point is how much equity is in that home. All right, and they're going to send an appraiser out, all of that good stuff. But a line of credit, is more based on you, your position, or your company's position. Now, a lot of people think, and I was one of them when I started, that, okay, great, I'm going to make an LLC, and then my LLC is going to get a line of credit. No, it's not. It's just, let's be real. I'm always very real. It's not easy, if possible even, to get a line of credit on an LLC that has no history. So one thing I highly recommend to you is that you open up some credit cards that are easy to get in the name of your entity. So Home Depot and Lowe's, Office Max or Office Depot, they are pretty lenient in giving you a credit card for your LLC or other entity. They are going to ask you to back it personally, though, which, if you can, is fine. But then you want to use it, put things on that credit card and pay them off in a timely fashion. And that will develop some credit history for your LLC. I don't know if things have changed since I started, but, when I first started, which again is like 2009, it's 11 years this year, 9.5. Your business had to have, like 3 years of being active and profitable before I was able to get any kind of line of credit. So that may apply for you now. It may come in a little bit later. Any questions before I move on? This is going to be really fast if you don't ask me some questions. Hey, Alex. Carol, how we doing? Okay, I'm going to move on. I'm going to talk about one of my very favorite ways to fund deals, which may not be available to everybody, but pretty soon we're going to talk about using private money, and some of these techniques that I'm talking about prior to private money can come into play from your private lender. So pay attention. Self-directed retirement accounts. Oh my gosh. Again, I appreciate and respect the fact that not everybody necessarily has a retirement account. But if you do, or you know somebody who does, so an IRA, many 401ks, there's a lot of flavors of 401ks. So you have to, do some research on your particular account. I'm going to read that question here and I'll come back. Stephanie says, you stated what stores besides Office Depot may give a line of credit. It would be a credit card, and I suggested Home Depot and Lowe's. I got both of those very, very early on for my LLC. Got credit cards there. You want to get the commercial cards because they give you discounts. It's very nice. Okay, so yeah, Sharon, I love private money too. I promise we're going to get there. I'm going to save it for last. Okay, so where was I? Yes. Self-directed retirement accounts, IRAs, many 401ks, and if you happen to be in Canada, an RRSP is what it's called. Don't ask me what that stands for. Something retirement savings plan, I think. Those can also be self-directed. What do I mean by being self-directed? All right, so you've got some money in, let's call it an IRA to be generic, okay? And right now, that money is being directed into things like stocks and mutual funds and so forth, which at some point in time, you might not even remember, you talked to a custodian, like maybe Fidelity, and you said, yeah, let's put 20% in this and 4% in this group of stocks and blah, 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 right? And so that's how the money is directed. Now, when you have a traditional retirement account like that, in a good year, at least in my experience, we've made 5-6% return. That's a good year, okay? In a bad year, you're losing 3, 4, 5%. Because you know what, for one thing, there's lots of fees involved, and you're counting on the stock market. How much control do you have over the stock market? None, zero, okay? Stocks go up, you get all excited, and then they go down. And so it's a roller coaster ride that I don't enjoy, okay? So when you take your money from a traditional IRA and move it into a self-directed IRA, and let me stop right there. This needs to be done so that it is a non-taxable transaction. All right. If you just clumsily take money out of your retirement account and put it in a self-directed one, if you don't do that right, you're going to be taxed on it. And that's not what we want to do. So you need to work with a custodian who has self-directed IRAs and specializes with real estate investors. By the way, in this charming little book that Andrea Wiley and I wrote, A Time to Profit, we have a big chapter. It's chapter 8. It's on page 122. If you haven't read our book, you really should. I think it's fun to read. So there's a whole section in here on funding. And in fact, when I made my plans for tonight, I literally went through my own chapter, our own chapter, so that I wouldn't miss anything. The reason I mention that right now is that we have some recommended IRA custodians in that chapter. And I'm happy to share those with you offline as well, that do handle self-directed accounts and work specifically with real estate investors. Okay, so you have appropriately, with the help of an expert custodian, moved some of your retirement funds into a self-directed account. I wouldn't move them all. The way I have done it is I've moved as much as I've needed for one deal, okay, into the self-directed account, because once the money sits in a self-directed account, it earns nothing, which is better than losing, but it earns nothing until you direct it. So through the custodian, you direct it to purchase a property. It could be a fix and flip. It could be a rental, okay? Now, again, you need a very good custodian, because there are lots of rules, and if you don't follow all the rules, the IRS could tax you on everything that ends up in that account. So it cannot be a house you've had previous interest in. It cannot be a house you live in. You cannot vacation in this house. No one in your family can live in it or vacation in it. You cannot do any of the actual renovation work, and so forth. So, you do need to get somebody that can guide you properly. All the funds go into that account, like the profit, the rent, any bills like taxes, contractor bills, insurance have to come out of that account. All right, but having said all of that, I hold a good number of our rentals in a self-directed IRA. It is, to me, a miraculous hedge against that fear that says, am I going to outlive my retirement funds? Because here's the beauty of it. And at 59 and a half, I'm sorry, I didn't quite finish the scenario here. At 59 and a half, and I'm there, okay, past there, you can withdraw money from the self-directed IRA as in rents or as in money from a flip or a lease option or whatever, and you only pay your current taxes on it, your current tax bracket. Now, you could also have a Roth self-directed IRA if you're, a little younger in years. I know that Andrea has hers that way because they expect their income to keep going. I expect to keep doing less and less as I go more and more into just enjoying grandbabies and going to Hawaii and so forth. But if you're younger than 59 and a half and you did want to withdraw some money, you can. You will pay your normal taxes plus a 10% penalty. Not the end of the world, depending on how much profit you're putting in there from rents or flips. So, if you have your funds in a typical retirement account and you need some of that money, you're going to sell the stocks or whatever, and then it's gone. No more there, right? But when I withdraw rents or profit from a flip, I haven't lost the big nest egg, right? When I take the rents out every month, the houses stay in there and keep producing more rents and generally keep going up in value. But even if they go down in value, the rents don't. So I absolutely love it. I want you to keep all of that in mind when we get around to private money too, okay? All righty. Hey, Liberio, good to see you. All righty, so let's talk about, will it work for annuity? Hester, I'm not sure what you mean by that. If you can elaborate on that a little bit for me in the chat, I'll try to come back to that point. Okay, so I just want to talk about getting a traditional mortgage. You know, I mentioned earlier that there is no shame in using your own money if you have it. There's no shame in using your good credit if you have it either. I have held rentals. I have done fix and flips, just getting a traditional mortgage. And again, I realize I'm in a fortunate position where my credit is, you know, at a state usually where I can do that. And so, you know, when you get a mortgage on a house, which is going to be an investment property, it is going to be a conventional mortgage in the sense that it's going to be backed by Fannie Mae or Freddie Mac, and therefore there's all these rules and qualification criteria, which is fine. You know, you can get, I'd get a 30-year mortgage. That's what I've done. No, I haven't seen a prepayment penalty, and I couldn't tell you when, but make sure there isn't one, right? And then you just hold the rental or do the fix and flip and pay off the mortgage. Now, one little caveat that I want to address there is this. When we think about asset protection, we always say, and I agree, that your rental properties, your fix and flips should be in an entity in your LLC or whatever you have, not your personal name. Why do we say that? Because if your contractor or the UPS guy or your tenants slip and fall or whatever they do, they could sue you, right? And if it's in your personal name, everything you personally own, like your own home, your car, whatever, is potentially at risk. If the property is in an LLC, there is at least a respectable level of asset protection, right? Only what is owned by that LLC is at risk, kinda. You know, a really sharp attorney can do what they call pierce the corporate shell and still get you, but it takes a lot more work, takes a lot more legal fees on the side of the person, you know, pursuing you. So it's so much less likely that that would harm you if your property's in an LLC. Why am I detouring to that topic? Because, once again, just like I said with lines of credit, chances are slim to none that your entity is going to qualify for a conventional mortgage, which means if you want to use this funding technique, which I love, you're going to have to get the loan in your personal name, assuming, you know, you can get a loan. Now, some people will then quit claim it to their LLC and just not tell the lender. Not telling you should or shouldn't do that. You know, it's been done. Okay. All right. So that is traditional mortgages. Oh, and the other point is a mortgage on an investment property, the interest rate will be somewhat higher than it would be on your personal residence. And by the way, don't fib. Don't say you're going to live there if you're not. It is not worth your reputation and the potential fines from doing so, okay? I totally believe we should do everything according to the letter of the law and codes and all of that good stuff, okay? All right, so traditional mortgages. Now, small community banks and credit unions. What do I mean by small? They have 1 to maybe 5, 6 branches, okay? I'm talking small. I'm talking you probably never heard their name before. Isn't it fun? I have to put on my glasses to read the chat. Liberia, what about when you have too many in your DCRs over the bank's regs? That's when you go to the small community banks. What a good lead-in. Yes, there are only a certain number of mortgages you can have. It varies from time to time and location to location, but in many cases, you can only have 10 conventional mortgages. But if you can qualify for 10 conventional mortgages, you're probably in a pretty good position. You're going to have other ways to find deals, right? So if you hit that roadblock, you let me know and we'll brainstorm, okay? All right, so, but great lead-in for small community banks and credit unions. We are looking for financial institutions which hold their loans in-house. It's either going to be called an in-house loan or a portfolio loan. What that means is they make their own decisions. They make their rules, okay? Literally, you know, the one that I've worked with in Seattle at one point, literally every Monday morning, they would gather in their conference room, with coffee and donuts or whatever, and say, hey, what do you think of Gena? Do you want to give her a loan? What do you think of this deal? And they just decide, okay? So they have much more flexibility. They have a vested interest within the community. So the first thing you want to do, and by the way, we have all kinds of direction on this in our book, A Time to Profit. How do you get my book, you say? How nice of you to ask. If you will go to our website, A Time to Profit, you will find a tab that says, get the book, or get my book, or whatever it says. And it will then give you a form to fill out and send you to the link to purchase the book. Okay, so these little banks don't have to follow Freddie and Fannie rules, all right? Thank you, Liberio. I'm glad you enjoyed the book. So they simply decide, and they will only loan in a very small geographic area. So, like the bank that is here in Seattle, I mean, there's more than one, but they're not going to loan a deal for you in Kansas City. You got to find the bank in Kansas City. If you're in Atlanta, you got to find the banks in Atlanta. So it's a bit of a fun scavenger hunt. First thing you want to do is simply Google or go to the online yellow pages, whatever, banks, and get a giant list. I mean, you're probably going to find, 60 different banks and credit unions. Cross off everyone you've ever heard of. We're not talking, again, Wells Fargo, US Bank, Bank of America, anything like that. We don't want the banks for this situation that are across many states or have, 50 in your state. Well, that one might work. Thank you, Carol. Carol has posted the link to get our book. Thank you so much. So you want those little banks that literally have 1 to maybe a half dozen branches. And they're going to want to meet you. And you're going to want to prepare for this meeting. You're going to want to create what I would call a credibility kit or a business positioning statement. Who are you? What are your credentials? And hey, if you don't have credentials in real estate yet, you just want to present, what have you done in life? What positions have you held? What community services have you worked with? Are you active in your church or Kiwanis? What will make people feel warm and fuzzy and confident in you? Okay, so you create this and you go to the meeting prepared, and don't give a presentation. You always want to just talk to people. What do they need to know? What do they want to know about you? And you just paint the most positive picture of yourself as you can. And by the way, if you've done some deals, it's almost a no-brainer, right? So you're going to then, they're going to look at you. They have an interest in that community. You want to stress that you're really, you're renovating homes. You're making nice homes for people. You love the community. You're part of the Chamber of Commerce, or, whatever may be the case, or, you work in the school district and you have this mutual interest in the community. Now, that'll only go so far. They're still going to look at what you're trying to do, okay? But there's a much better chance that they are going to give you either a first mortgage or no season refi with better terms and less restrictions than the big players will. Also, for lines of credit or home equity lines of credit, I would work with some of these players. Yeah, Liberio, absolutely. Check local chambers and Rotary clubs for local lenders. Also, your real estate investment clubs. Often these kind of local community banks will even be present in the meeting. So very good point. Now, if you can get an originating mortgage there or a line of credit, that's awesome. But let's talk about, as sort of a subtopic, no season refinancing. First of all, that assumes you can buy for cash. And how are you going to do that, right? That's going to bring us to a couple topics I haven't talked about yet, which is hard money and private money. So just take the journey with me for a moment. Let's say you got cash somewhere, okay? And you purchased the home for cash. Maybe it was a HELOC. Maybe it was from a self-directed IRA. Oh, those are harder to refinance. And you purchased a home for cash. All right. So, I'm sorry, I'm just kind of trying to keep up with the chat roll here. So you've got a home purchase for cash. You've already identified before you did that that there are community banks, or at least one, that will do this no season refi. What do we mean by no season? Okay, doesn't mean there's no salt involved, doesn't mean there's not fall where that happens. It means that you do not have to have a record of making mortgage payments on that property. If you want to refinance a home with a loan from Freddie Mac or Fannie Mae, they're going to require 12 months of seasoning, sometimes 6 months, generally 12, before they will allow you to refinance. Well, that's a long time to have your money tied up in that house, right? So you find these banks and you start making a phone call. We have got the entire questionnaire in here, okay, about what you want to ask them. Number one, do they have in-house or portfolio loans? Do they do no season refis? Do they base it on your purchase price or the appraised price? How long is this going to take them? Do they count rental income as income? Are they going to report this to the credit union? A lot of these banks don't even report these loans. So that takes care of that whole issue of how many loans can I get, how many mortgages. With the right kind of community bank, there is no limit, really. So let's say you had a private lender, which is coming up, who loaned you the money for, 3 months, 4 months, or less. How quickly can you get that house renovated and get a tenant in there? Then you go to the community bank and you withdraw this money. And now, of course, your cash flow is going to go down on that property, right? So you want to leave enough money in there so you're still making 100, 150, 200 a month. But you withdraw that money. If it's your own money, you can go buy another one, right? And recycle that money over and over. If it's a happy private lender, he or she will often let you just wash and repeat, rinse and repeat, right? Do it over and over again. Now, the ideal scenario is not always going to happen, but let's look at the ideal scenario. Let's say you bought a house for 50 and you put 10 into it. So you're in the house for 60,000. You find a community bank that's going to do a refinance. They come and they appraise the house for 100,000. Not unrealistic in many cases. They will give you a refinance. Let's say it's 75% of the appraised value. You've got 60 in the house. It's appraised for 100. They'll refinance at 75%. That means you can pull out $75,000. That's more than was in it. Now, again, that won't always happen, but it is the ideal. It is sometimes possible, and it is a great way to grow that farm of rental properties. Okay, fantastic way to do it. So that is small community banks and credit unions. Let's see. Liberia always tries to leave 35 to 40% equity. I mean, that's certainly smart. That certainly reduces your risk, because if the market does take a drop, which eventually it will, right? Hopefully you don't find yourself underwater. So I think that's really smart. Okay, so we have talked about having no money and therefore sticking with wholesaling or sandwich lease options. We've talked about you got some money, let's use it, whether that's in a home equity line of credit, which we call a HELOC, H-E-L-O-C, or a self-directed retirement account, typically an IRA, but it could be a 401k or an RRSP. We've talked about getting lines of credit, either for yourself or for your entity. We've talked a bit about how to grow some credit history for your LLC or whatever entity you have by getting some credit cards and using them and paying them off from places like Lowe's, Home Depot, Office Depot. Let's talk, I think I have 3 more topics. Let's talk about credit cards. This one kind of gives me the heebie-jeebies a little bit because you have to be careful, but I've done it, okay? Oftentimes you can get an offer on a credit card or a line of credit from your bank, same kind of thing, where you can get this credit card with an introductory offer of 0% or 3% or something like that for the first, oftentimes let's say 18 months. And then, boop, you're up to 16%, 29%, whatever that interest rate may be. That is an awesome way, as long as you're careful, to maybe not purchase the complete home, but fund a renovation, right? So if you've got a $15,000 line of credit, even if it's a $5,000 or credit card, $5,000 credit card, it's not that hard sometimes to get like a $30,000 line of credit. And if you can use that judiciously, watch the due dates, make the minimum payments, because if you don't make those minimum payments on any of this stuff, they jack your interest rate up. But, it's kind of like, it's like the ball under the cups, just be careful that you know where the ball is and pay it off in time. But credit cards can be really useful in funding your deals. Once again, whether they're yours or your private lenders, okay? So I throw that out there. I also will caution you, as I did with the line of credit or HELOCs, that anytime you open up additional credit, access to additional credit, even if you're not using it, it can lower your credit score. And that, is often basically temporary, but you're going to have to work to get it back up. And the question, once again, is, does that matter, right? Okay, so that was credit cards. Let's talk about hard money, and then we'll hit private money. Hard money. When I was a new investor, I'd probably been in my training program and already done a deal, for a few months, and I still didn't have a clue what people meant by hard money. I mean, I really didn't. That's why, please, guys, never hesitate to ask me a question. But, message me in the den, put questions in the real estate Den group page on Facebook. You cannot ask me a question that I'm going to laugh about, because I knew nothing. Okay, so please never feel shy about that. So hard money, what that means, these are professional lenders, and they make their decision not based on you and your credit, your employment, and all of that stuff. Some of them look at it a little bit, but the primary decision is the hard asset, as in the house, okay? So a hard money lender is going to look at how good of a deal is it? And also, by the way, they tend to lend in a smaller geography. There are nationwide hard money lenders, but they're going to have higher rates and everything. I like to work with local hard money lenders. Great place to find them is at your real estate investment club. Oh my goodness, when I go to my real estate investment club meeting, there's always like vendor booths set up before the main meeting, like out in the big lobby area, if you will. 80% of those vendor booths are hard money lenders. So they're not hard to find. Hard money lenders are hard to find. No, they're easy to find. And so they're going to look at your deal. And if it's a good deal, they're likely to fund it. Now, why do I say likely? Because it's not always a shoe. And they're also going to look at you, not your money position, but do you know what you're doing, right? Don't expect to get 100% loan on your first fix and flip. You don't have the experience. You don't yet have the credibility. Another good place for your credibility kit, which we talk about in our Time to Profit book, how to build a credibility kit. So, generally speaking, they're going to loan you 75% of your purchase price, maybe your rehab costs, maybe not, right? They're going to charge generally 12 to 15% interest and 3 to 5 points, a point being 1% of the loan. So if you were borrowing $100,000 and they were charging you 3 points, oftentimes the way it works is they'll give you $97,000. Okay, so you're paying those points up front right out of the loan, which is kind of nice. You don't have to come up with that money. And then you're usually making monthly payments. Now, it's expensive money, right? But you're not going to have it long term. This is not for rentals, okay? This is, unless you know for sure you can refinance that with a community bank or something, very, very quickly thereafter. But it's great money for fix and flip. I had first felt very adverse about it, because why would I pay those kind of rates? Well, just work those costs into your numbers when you're looking at your deal, right? And if you have to pay that and you're still making a reasonable profit, there's nothing wrong with that. In fact, I got so hot on private money, which I'm talking about next, that it took me a while to realize that in some instances, I would have been able to keep more of my profit or more of my profit on a flip with a hard money loan than a private money loan. So definitely keep it in your arsenal. All right, keep it in your arsenal. So find hard money lenders, find out what their terms are, get to know them before you have a deal, find out what they're going to, typically charge, what criteria they're looking for. One warning, you should never have to pay any fees up front. Okay, so steer away from anybody that wants some money to decide if they're going to loan you money. That is a bad practice. So let's see what Liberio has to say here. He's a great contributor. Sometimes hard money guys loan 50 to 60%. Yeah, I mean, 75 is not a shoo-in. Yeah, They also look for defaults sometimes to get good discount deals. Yes, exactly. Because what happens if somebody defaults on their hard money deals, the lender gets it, right? So that's good for them, but they don't always want it. So hard money lenders are a good way to find off market deals. Build that relationship, have them call you, if they get a deal that they don't want because somebody defaulted on their loan. All righty, so that is hard money. So now let's talk about private money, okay? Private money lenders are not professional lenders. So let's talk a little bit about semantics here. If somebody has a website up online and they're calling themselves a private lender, that's a hard money lender, okay? It's just, like we don't have used car salesmen anymore. We have previously used car salesmen, right? It's just semantics. So the way I talk about private money, this is somebody who doesn't professionally lend money. So who is it? It's somebody you know, or somebody who you know knows, okay? And they have either cash sitting in the bank. My first private lender was one of my neighbors. Some of you may have heard me tell this story. And she had just some tens of thousands of dollars sitting in the bank, not even in a CD, just sitting in her savings account, earning 0.05%, as in 0.5% interest, okay? Well, I paid her 7% and I could have done it for less. So 14 times her income, right? And it was enough money, to buy an entire property and renovate it. I had zero in that property. And my neighbor was delighted because she was getting enough interest every month to, take her kids out for a couple of extra outings in the month. It was fantastic. She had that house for, about 7 years. Now, she didn't have the house. Let me explain who has what, but she had the loan on that house. So my accountant has loaned me money. People I have met at various REI events across the country. I've had one repeat lender who I met at one of Dean's Edge events several years ago. People from your local REI club. You don't know who has money. Have any of you read The Millionaire Next Door? Great book. I should do a live some month just on my favorite books. The Millionaire Next Door points out that many wealthy people live very modestly. I remember one of my colleagues / mentors said his first private money lender was his air conditioning repair guy. You wouldn't necessarily think your AC repair guy had a wad of money tucked away, but he did, right? So, just start talking about it. No, you have to have the right mindset. You are not asking for money. You are not looking for a favor. You are not the beggar. You have an opportunity. You have the goods. You have an opportunity for other people to earn more on their money than they're earning now. All right? You are the one who has learned the business, works hard to get the deal. There's a lot of people who would love to make money from the real estate market, but don't want to learn how to do it all. Okay. Obvious, your dentist, your doctor, all kinds of people, real estate agents, there's just tons of people who could do this with you. So you just kind of start talking it up. Now that I'm investing in real estate, I have opportunities for the right person to make a much higher return on their money than in a traditional investment. I don't mean you, right? You play it a little bit hard to get. Well, why not me, right? So again, your credibility kit can be a very good thing here. So once you have found the investor, you want to let them know that the next time you have a suitable deal in hand, you will present it to them. I've always created kind of a spec sheet, a one or 2 page sheet with some pictures of the property. Of course, this could all be online, right? You don't have to print it out. The numbers, and what are the big points to remember? Anytime you're selling something, which is like always, you're selling to your private money investor, just tell them what they want to hear. I don't mean fib to them, but if they're not like a really big numbers person, don't start explaining ROI, okay? My first lender that I've been talking about, she just wanted to see pictures of the house and she loved the word work and the leaded glass windows. That's how she made her decision. And because she knew me and trusted me, right? On the other hand, when my accountant has done deals with me, you think he cares about what the windows are made of? No. He wants the spreadsheet. He wants to see the costs involved. He wants to see the equity position. He wants to see the rent and all of that stuff, right? So understand your lender and what is it they need to know. Because you can lose a lender by telling them too much or telling them the wrong thing anytime in a sale. Don't sell past the sale, right? So once you have a lender and you have an opportunity and you present it to them and they're like, yes, I'm in, beautiful. You've got to do this legally. I'm not an attorney. I am not a CPA. I am never, ever giving you legal or accounting advice. Seek the help of a professional. But seriously, with private money, the Securities Exchange Commission, both on the national level and the state levels, has some really serious rules and regulations about this. So I want you to work with an attorney. In some states, the title companies have the legal ability to do it, but make sure you get it done legally. You're going to have that attorney or the title company or whatever draw up 2 documents. One is going to be a promissory note, which explains the deal. How long is this money being loaned? At what interest rate? How much is it? What payments do they want? How frequently, right? And then the second document, depending on what your state uses, is either a mortgage or a deed of trust, same thing, okay? And that mortgage or deed of trust reiterates what the promissory note has stated, okay? And your lender is essentially like the bank, okay? They hold the mortgage or the deed of trust, so they have a lien on the property. Now, I've always been able to do it because I hold my rentals in rather inexpensive markets. I've always been able to put just one lender per property, which to me is ideal. But you can do more than one lender. One person would be in first position, the other would be in second, even potentially third. Or your several lenders could create an LLC together, and the LLC then could be the private money lender. And the operating agreement for the LLC could spell out all of the terms that your lenders have agreed on. Or you can put together what is called a private placement memorandum with an attorney. It's going to cost you several $1,000s to do this. It basically allows you to pool funds that are sitting there waiting to be used from multiple investors. The thing is, you got to pay them interest whether you're using that money or not. That more typically is done for a commercial deal, but it could be done if you're doing a bunch of single families. So lots of ways to do private money, but I absolutely love it. Now, your private lender can receive money 2 different ways. They can either simply get a fixed interest rate, which is my preference. We would call that a debt partnership. I like that because they're going to get the same return no matter how good or how bad my deal goes. Right? So they have less risk. Also, because they know what they're getting, they tend to have less stick their nose in my business tendency, right? Because they don't know real estate, I do, right? The other way to do it, though, is you can do a split on your cash flow on a rental or on your profit on a flip, 50-50, 40-60, 30-70, you know, you getting more, by the way, you're the one doing the work, whatever you agree to. Okay. It was in a situation like that where I did a 50-50 split one time where I sat back and thought, I could have kept more of that money had I used hard money. So just, you know, be careful. Really know your numbers when you're going into your deal. You know, that old expression, the money is made when you get the deal, right? When you decide to lock it in, you've got to know what the numbers are. You've got to have buffers in there. Let me catch up on any comments. Yeah, Labario remembers some of my stories. I know, we all tell the same stories over and over, right? Labario said, secured by first position, do you create a mortgage for these funds? How do you secure their position? Yeah, I create a mortgage, and yes, they are in first position, and yet unless there's more than one lender, then somebody has to be in second. So yes, they officially have a lien. It is filed with the county. So you cannot resell that property without that lien being satisfied. They have to create a letter releasing that lien when the time comes to sell it. Also, which I neglected to mention, you name them in the insurance policy of the home, right? So that they are the beneficiary should, you know, the house catch on fire or whatever. I've never had that happen, fortunately. What if they want a deed in lieu of foreclosure? I have never done that, and I'd probably find another lender. But, you know, I'll tell you what, I've had a lot of great successes, and I've had a few failures. And I did have one situation with a private lender that got really unpleasant because, you know, the flip didn't go well, the rent didn't go well, and all that stuff. I think if he had a deed in, well, actually, it's funny. If he had a deed in lieu of foreclosure, I don't think he would have taken it, because I was trying to give him the deed to that property. He didn't want it. But I mean, use your judgment. You know, if the deal isn't going well, they do have to go through the foreclosure process to get it from you, unless you have that deed in lieu. So, but it's just not something that's ever come up with the ones I've done. Okay, that is private money. Now, let's circle back and talk about ways your private lenders might get money and they don't even know. Okay, they might go like, yeah, no, I don't have $80,000 sitting in the bank. But do they have $80,000 in their home's equity? Could they get a home equity line of credit? One of my biggest private lenders did exactly that. He was in Hawaii, so he had, you know, a lot of equity in an expensive house. So he had a 4% home equity line of credit, and he would loan me, and I'd pay him his 7-8%, right? Maybe once I paid him 9%. So he's making that arbitrage, that difference between the interest. Also, you could, of course, split the cash flow or the profit with them. Could that individual self-direct their retirement account and loan money from their retirement account to you? That's a great way. I know that Andrea Wiley, she loans money from her self-directed IRA. I've done that too, just once though. Great way to get private funds. They may not know that they can do this, that they could have a HELOC, that they could self-direct retirement funds. Could they open a line of credit or credit cards and loan you, and you pay them more than their interest? So sometimes you have to educate your potential private investors as to where they actually do have funds and why it would be to their benefit to use those assets. So we have talked about no money, cash, HELOCs, self-directed retirement accounts, traditional mortgages, small community banks, lines of credit, credit cards, hard money, private money. I want to give you some to-dos, because just listening to all of this, you know, education is worth nothing if you don't implement, right? So I'm gonna read you this right from our book. This is on page 134 at the end of the chapter about funding. All of our chapters end in a section we call Building Momentum, and it gives you specific and easy to do tasks to start implementing what you just learned. Okay, so look at your 401k or IRA if you have one. See if you can self-direct. Find the custodian that can do that. Look at your credit card limits, including cash advances. Can you increase any of those? Can you get a low introductory rate on something new? I want you to find local hard money lenders. Go to your REI clubs. Not only will you find hard money lenders there, but you'll probably get some good leads on those small community banks or credit unions. Do the online searching and start making the phone calls to the small community banks. Make a list of everybody you know, just brainstorm it out that you think might be a private money lender, potential, and start talking up the kind of opportunities you sometimes have. Determine if you yourself have equity in a home and see if you can't take a HELOC out. Taking out a HELOC, and very, very small amount of cost involved in that. And then lastly, see if you can get some lines of credit and open up the credit cards for your LLC. So there's, 7, 8 to-dos that I would love to have you report back on. Post in the den, post in the forums. What have you done? Post in the Facebook group. Let us help hold you accountable. Okay, it's nice to chat with you here for an hour online, but if we never communicate again, I don't know what's happening and I can't help you any further. Please, if you've got any comments or questions, post them before I sign off. I do want to just mention also that Andrea and I, on our website, A Time to Profit, have a full curriculum of online training. Okay. Our premier course, if you will, our most complete curriculum is called Freedom in Real Estate. We refer to it as FIRE. It's got a whole section on funding in there. It also covers wholesaling and flips and rentals and full service wholesaling and turnkeys and lease options and sandwich lease options and building a team and market analysis and you name it, it's in that course. We have other courses that just cover wholesaling. We have a course on remote investing. We have a course on time management and on and on. So I urge you at least go take a look. By the way, once you get the book, there's also some free videos that accompany the book. We offer a discount to DEN members. I don't want you to spread this around. This is just for DEN members. If you look at our education and you decide there's something that would serve you well, okay, when you're checking out, use a place to enter a coupon code. If you enter the word DEN, simply D-E-N, that gives you 20% off of anything, okay? So we'd love to do that for you. On all of our courses, there's places where you can ask questions. You can email us at info@atimetопроfit, and we will answer your questions there. So it's a very interactive experience, though the course is online, which I love because that means you can take it anytime you want. You can be sitting in your car waiting for your kid to come out of school and, you know, be taking a section. Even though it's online, it's not static. We are there updating, we are there answering your questions. So have a look, but my goodness, what a value is the DEN. We are here to serve, so I urge you to please take advantage. Sharon, let's see. Sharon says, we are a private lender and unfortunately we had to foreclose. Yeah. You know, it can happen, as you painfully know, no doubt. You know, and that cost you some money. Hopefully the house that you foreclosed upon, you know, was worth it. You know, everybody can make a mistake, but just be as prudent as you can, you know, going in. Do your own due diligence, which simply means research. You know, don't take what anybody else says, you know, at their word. I've loaned private money too, and not every experience has been great. But, you know, in general, I think it's a fabulous technique. And I know, Sharon, you think that too. Liberio, thank you so much. Mary Weatherington she said our program was killer. That's so great. And she did do a flip afterwards. We have the online education. Mary actually attended one of our live events. Occasionally, Andrea and I will put on a live mastermind or mini class. And we keep those very, very small group because we want to be very hands-on with everybody in attendance. We're considering doing another one. So if anybody's interested, please let us know. We'll get you some information on that. Another offering that we're just starting is we will fly out to you and work with you hand in hand for 2 to 3 days. These things aren't free, guys. Okay, not going to kid you. We're not, you know, we both are real estate investors because we like the freedom it gives us. So when we put our time into something, we make it killer, but, you know, we do charge for it. So we think it's very reasonable what we charge compared to so many of the big name gurus. And we both have done hundreds of deals in dozens and dozens of cities. So we know what we're talking about, and we are more than happy to share that with you. Okay, thank you, Carol, for posting our website. Sharon says she's done several subject to. Oh, in her self-directed IRA. Very cool. I love that, Sharon. That would be really, you know, Sharon, if ever you want to share, I'm sure Carol would agree. We would love to have some of you guys as guest presenters from time to time. You know, everybody's got their unique experiences, and, you know, we could chat together about, would this be a good thing to share with the DEN community? That would be awesome. And Sharon, I know you've become quite a leader in your investing among your community. So I'm so proud to know you. All right, folks. Well, that's it for tonight. It's time for me to go get some dinner. You know, I'm in Seattle, so it's only 5:06 here. So time for some food and maybe some red wine. Cheers. God bless you.